We're at the Financial News Investment Banking Awards in London's Belgravia. With so many of the industry's big names here tonight, we decided to ask them what were the big themes of 2015 and what do they think will happen in 2016.
It was a good start of the year. We had, I think, a very open market, and I think everything flowing very well from capital markets to M&A. And then as the year went by, we went into our third Greek crisis, and that has decent effect on the capital markets. And months of June and July were much more difficult than we would have expected. And then obviously we came from I think the worst August in a very long time to a lumpy September because of China and what happened. And then from there I think things have really cheered up, and I think obviously we've had the terrible events of Paris, that obviously we really don't know what's going to be the effect on geopolitics. But from a market's perspective, things have gone much better, and we're looking at the year end and the prospects of next year as actually very, very optimistically. We have a great pipeline.
When I think about 2016, for me, the most interesting thing that's going to play out in Europe, we're finally going to see some of the strategic bets that banks are making either pay off, or perhaps banks will find themselves in a more challenging position. And what I mean by that is, when you think about some of the restructuring that's gone on in 2015, we see banks with new CEOs. We see banks continuing a deleveraging process, raising capital. But more importantly, each bank this past year picked its own bespoke and unique strategy. And so in many ways right now, the European banking landscape resembles many categories of one. And what I mean by that, I can't think of a time in my career where each bank has its own unique and differentiated strategy. And so I think 2016 will start to be the year where we figure out some of these strategic bets, who the winners are and who doesn't do as well.
There is certainly a lot more volatility. I think we're entering a period of just higher volatility over the course of the next 6 to 12 months, given some of the things I've mentioned, but also when you factor in all of the geopolitical issues that are going on in the world, tragic events in Paris over the weekend, just as the most recent example. So I think it's going to take a little bit of confidence for the market, a little bit of time for the market to get its confidence back. But I think those fundamental themes are still ultimately in place.
Personally, on US interest rates, I think we'll see rates staying low for longer than we expected. After all, inflation, the target inflation rate is 2% on average. And if it means on average, then they're taking 2-3 years as the base for the average. And given where inflation is right now in the US, there is no justification for an interest rate hike. And so watch the space. It's going to stay interesting.